All right, incredible opportunity with the volatility that we have in the markets. We haven't seen this in a while, so it's exciting as a trader. And we are not calibrated for this type of volatility. We have our Cobra 3 trading system here, and you see some nice trades, but that's based on a change in some of the parameters. And I'm going to show you that. I want to talk about in this video a way to take advantage of this volatility. One of the ways you can do that is to remove your profit targets. Cobra 3 has a $300 profit target and a $600 profit target and a $300 stop loss. And in this setup, we remove the $300 profit target. So I want to show you the results before and then show the results after. So I'm going to set up the default settings. So here's what some of the recent trades look like this week and the past couple of weeks. You see these trades here on the 29th of January and on the 30th of January before the market started really turning over. And you see this trade here got out pretty early in the trend, and this trade is just such a small blip of this trend. How do you capture? We really want to put ourselves in a position to capture this move, and this is what we had. And here is the TradeStation performance summary back to 1997. Even though the actual trades don't go back, and they go to 1998 because we use the advancers and decliners, and those don't have data until about 1998. Even though the E-mini S&P goes back to 1997. So here is the performance summary. You see 55, 87.50 on a closed trade drawdown, 6,050 on an open trade intraday peak to valley, 42,987. This is with slippage and commission. Here is the equity curve. This uses $25 round turn slippage and commission, so you see some additional chop in that. And before slippage and commission, this is about $59. So after $25 is taken out per trade, it's $34 on the E-mini S&P. How can we capture larger moves? And so one of the things we can do is to turn off the profit target. So that's what I'm going to do. I'm going to pause the video. I'm going to change the settings and turn off the profit target, and then show you the difference in the results. So here you see the strategy. It includes a $300 stop loss and a $600 profit target. Let's set that to false, and then take a look at the results. Pausing the video. So here are the trades. If you take out the profit target, you get at the end of the day, and these two trades were stopped out, and you see the results here. A little bit better, $35 average trade profit, so it only boosts the average trade profit by about $1. And the closed trade drawdown stays about the same. The open trade drawdown increases, and you see the equity curve. The net profit is about the same. Not a big difference, but what you see here is the recent results. So if you want to take the profit target off during this period of high volatility, your past performance will not change that much, but your recent performance could capture some big moves, because we're having all-time. We went from a period from all-time low volatility periods to all-time high volatility periods. And so we like to trade normal volatility, but we've endured a period of all-time low volatility followed by a slam in all-time high volatility. So when you remove the profit target, it gives you the opportunity to get out at the end of the day, and a lot of trends last through the end of the day. And so you still see how you're stomped out here at the end of the day, or not at the end of the day, but I mean, it's just a blip. Today, Friday, we had a short trade. I mean, you're talking about a 6-point stop loss, $300. That's just not big enough for this market. And so what happens if we double that stop loss to $600? I'm going to pause the video and show you that, and you'll see the difference between the original settings of a $300 profit target and a $300 stop loss and a $600 profit target. And now it will show next as a $600 stop loss and no profit target. So what I'm going to do here is set the profit target to $600, or the stop loss. And then we'll take a look at the results. So here are the trades with the $600 stop loss. You see this trade works out better. It doesn't get stopped out. The trade from today still gets stopped out. It was on a $1,000. It had a $1,000 profit. And so what would happen if we put in a break-even stop at 1,000? I'll take a look at that next. But take a look at these results. It went from about 44,000 in the last one to 64,000, so almost a 50% boost in profit. The average trade profit goes from 35 to 51. That is with $25 slippage and commission. The max trade trade to close trade drawdown increases by about 1,000. The intraday drawdown increases by quite a bit, about 3,000 from the original strategy, but you see this huge spike here. So, I mean, it's very hard to trade this market if you're not used to it. And so what are some of the adjustments we can make systematically? You can discretionary trade this market. You can try to pick the low. I mean, if you pick the low today on Friday and you sell the high, you have about almost 110 points, 107 points or so. That's over $5,000 a contract, and so that's huge. It's very hard to do, though. Very hard to do. It can lure you in and make it look easy when you look at the charts, but it's very hard to do. So how do we do that systematically? Is we find a good system like Cobra 3 and we increase the stop loss and we remove the profit target and we sit back and we try to capture these trades. We're comfortable with the risk. You have to be comfortable with the drawdown though. So if you can't step into this and say, I'm comfortable with the drawdown, then don't do it. So you can break it down. The long trades are $30,000, $58. The short trades are $34,000, $46. You could just take the long trades if you wanted. It has a lower drawdown, big average trade profit. It would have not captured the trades this week, or maybe it would have. It's possible that it could. It's set to maximum of one trade per day, so it's possible that it could have captured some long trades as well. But that is one way to capture the big moves. You see with all the selling we've had lately, we've captured this one, and that one. This is hindsight. This is what we could have done. This is not what we did. We captured a couple of these moves here with 12-point profit targets, which was nice in the old volatility, but leaves you scratching your head with 100-point ranges. It's like, why are we capturing 12-point profits in this type of profit target, in this type of volatility in 100-point ranges in the S&P? So this volatility could collapse tomorrow, and even if it does, historically, not bad. It's not bad at all. You see very nice periods here in this time frame, and then it's at equity peaks. The original version is near equity peaks, and this one is at equity peaks. And you want to put yourself in the position to capture these moves. I'm going to show you another strategy next, CounterTrend Max, that can also capture this move. This is CounterTrend Max, and you see some of the trades here without the profit target. What would have happened without the profit target? Hit this huge winner. That's a massive winner right here. Calling the top here on the 5th earlier this week, and got stopped out here and then capturing this move. On Thursday, this was a winner for us. We got long here. It has a 7-point profit target, so it got that trade on the long side. If you remove the profit target, then you would have gotten stopped out instead. And so what are the results? Huge. If you keep the profit target, the results don't include the spike. The history is not much different. So the benefit of hindsight is that the history is about the same. What I'm seeing is the history is about the same, but if you remove the profit target, then you don't change the strategy results that much in the past. but you leave yourself open for huge profit potentials. You still keep your stop loss, and then you want to trade until the close. Now, we could hit choppy markets. This could do worse in the future. Volatility could collapse. But taking out that profit target is one of the best ways to trade this market. 2137.50, 3075, 73.83. This is with the $25 round turn subject commission. 17,425. This is an emerging market strategy since January of 2016, and I am going to add the profit target back to show you the difference. So here are the results with the profit target. Not bad, not a bad strategy. It peaked in June of 2017. It's kind of gone sideways since. 49.26 with $25 subject commission, so 75, 74 without. Drawdown's roughly the same, a little bit less with the profit target. You see the trade here on Thursday would have been profitable. I mean, here's what I'm talking about. You've got a day like this, and you're sitting here and you're saying, okay, there's the profit target. And if you're a short-term trader, that feels good, but I mean, look at this huge move. We want to be in a position to capture those moves, and this is one way to do that, is to just continue to trade it the way it is. Another thing you can do is you could trade these strategies, one contract with the profit target and one contract without. So between Cobra 3 and CounterTrend Max, these are some of the things you could do. I will work on setting this up in the portfolio so we can see the difference in the portfolio results. And so crazy week, and these are some of the things I'm looking at if this volatility continues.